All right. Hello, hello, hello. What's up, guys?
Welcome.
Shaking.
Nice hairdo, bro. You got the fresh cut.
Fresh cut, yeah.
Nice, nice. Well, welcome. First of all, I just got to say, both of your weekend options for Bitcoin's breakout have expired, worthless. Womp womp.
Yeah.
Womp,
Yeah.
womp.
For anybody that doesn't know, last week we did a little competition to figure out when Bitcoin was going to either break above 60 or below 50. I bought the more expensive options out in fake options. I bought the fake options for April 15th. You bought what, Saturday?
Sunday,
and you were Saturday. So I don't know. You guys owe me a Dogecoin.
Well, we should have done it on the NASDAQ. I would have nailed that one.
True. Yeah, we did have a big move on equities. Nice little inverse head and shoulders off of the 100-period moving average on the NASDAQ. And then a breakout to all-time highs on the S&P. Thank you, Federal Reserve. Fed-induced bubble. Hey. What's up, guys? How's everybody doing? Welcome, welcome. We are live. Today is April 6th. 2021, and we are
Where's
living
2021 going?
right.
It's like, what?
Quarter already in the books.
Done.
It's crazy. Yep, we're living in the upside down. We have so many weird things to talk about today.
Awesome. I love weird things.
Yes.
Let's get weird.
Yeah. Man, yeah, really just so much to talk about. Let's start off with something that's actually pretty interesting and exciting that I think is going to bring a lot of, well, even more attention to crypto this year. Coinbase is getting ready to go public next week through direct listing, I believe, right?
Yeah, I think the estimated valuation now is about what, 10 or 20 trillion or so.
Oh yeah. You know, just a good value.
Yeah, it goes up.
Yeah.
I thought it was like 80 billion, 80 to 100 billion, right?
Oh, it'll
Jesus.
easily price
Yeah.
over 100 billion.
Travis' mic is off.
Travis' mic is shut off. It's not.
Uh-oh.
Testing.
Maybe
Testing. Did I kick something?
Huh. Well, we did a mic check before we went live, so not sure what's going on here.
Uh-oh.
Well,
What do we
anyway,
do?
I'll just keep yakking. Coinbase just came out with some revenue numbers for Q1 of this year, and basically they blew it out of the water. So they generated 1.8 billion in the first quarter, and their EBITDA, actually, here's a good tweet with a really nice chart. They did 1.8 billion in EBITDA, 1.1 billion of net income. Or sorry, man, I jumped ahead of myself. There we go. Revenue of 1.8 billion, EBITDA 1.1 billion, and net income of 700 to 800 million. Are we good? Or are you still off?
Check.
We're gonna have to share.
All right. Well,
Yeah, just share the mic.
see you guys later.
Yeah, so I think this is just massive, you know, because again, adding 13 million users in just over 2 months. Obviously, this is driven by a bull run, but I think it, you know, either way, it's just a massive deal. So
These numbers are bananas. Those EBITDA margins, insane.
Yeah.
Obviously, the growth numbers, insane. Now, these are not normal rates, right? Like, crypto's had an amazing quarter.
yeah,
So I would not run rate those. Like, people are run rating those numbers on Twitter. They're saying, oh, now Coinbase is run rating, 4.5 billion of
yeah.
EBITDA and, 8 to 10 billion of revenue. I'd be surprised if they put that up for a full year, but I could be wrong. But we're in a pretty bullish crypto market, so regardless, like I said, this thing's going to easily price its direct listing over 100 billion. I'm guessing probably closer to 150 billion. It's going to be absurd.
Yeah.
I'm not buying, but that's just me.
what are we going to wait for? Here's what I think would be interesting. Say we get a Bitcoin bear market and Wall Street just hates Coinbase.
Yeah.
I think that would be a good time to buy. Right now, it's, yeah.
I actually think it's going to trade. You know how with Bitcoin you trade the cycles, the market cycles?
Yeah.
And I think, like you say, like Coinbase is probably going to be similar as a stock. It's just you're going to be able to trade the cycles similarly as well.
Yeah.
So it's probably going to be a volatile stock
Yeah.
over time, just as is Bitcoin.
And I'm still not salty at all about not being able to get in on the early angel rounds. My God, that's you just need one of those in your life. And, 25 grand turns into a lot of money.
That's right.
Yeah. All right. Well, looks like we've got a modified mic set up.
Check. Any luck?
And
Check.
so weird.
Check.
All right. Well, on to the next thing then.
We're going to make this work.
Yeah. Okay, so this is actually kind of the title of the show today, which is how to prepare for really like the New World Order or the Great Reset, as the IMF has been saying. And, this was an article that actually came out yesterday on the Wall Street Journal, just going into depth about China's new fake digital currency. And we say fake because it is government controlled. It is not a truly decentralized, fairly mined coin. And there are some really scary things to think about when it comes to this. But the general idea here is now the currency wars are really, really heating up. If we take a look at this article from a few days ago, the ECB is talking about, well, we're going to roll this out in I think like 4 or 5 years. You've got the US that's flirting with its own central bank digital currency. So China's like, look, guys, we're in this to win this, and we're going to push this thing on the world as fast and as hard as we can. And I just want to read a couple of quotes from this article that I just thought were really interesting. And Trav, I know Kevin doesn't want you to talk in today's episode, but you could steal Nikki's mic. I think why this is such a huge deal is the dollar has the most to lose right now, because right now the dollar far outstrips all other currencies for international foreign exchange trades at 88% for international bank settlements, and the yuan was just 4%. So the digital version of this, they're going to really try to push out in a much bigger way globally. And some other things just to think about here is these are some quotes. So China's Mr. Mu, the central bank official, repeatedly said that the digital yuan is aimed at protecting China's monetary sovereignty, including by offsetting global use of the dollar. So they're coming for the dollar. right? Like they're not being shy about this anymore. And one thing that is kind of scary, listen to this. The money itself is programmable. Beijing has already tested expiration dates to encourage its users to spend quickly for times when the economy needs a jump start.
That's what freaks me out.
Yeah. So, things like this where they're already showing like, yes, we're going to spy on every transaction. Yes, we're going to have the ability to take from you if your social credit score drops too low. And you know what? If you don't spend it the way we like it, we're just going to go ahead and take it from you or devalue it.
Did you ever see that Black Mirror episode with the social scoring?
Yeah.
Like this is Black Mirror's kind of stuff right here. Like I get that, when a economic crisis hits now, like the central banks react and they, do various things with buying asset prices or buying assets and stuff like that. But this is a whole nother level of like creepy, right?
Yeah.
The idea that they could force people to spend by making their money in their accounts actually expire is terrifying. I mean, I guess in some sense, like if you print enough money, then you're devaluing people's purchasing power. So it's kind of the same idea. But
this is just quicker.
Yeah,
and it's more deliberate and explicit.
Yes, which is fairly terrifying.
Yeah, here's another quote. It's also trackable, adding another tool to China's heavy state surveillance. The government deploys hundreds of millions of facial recognition cameras to monitor its population, sometimes using them to levy fines for activities such as jaywalking. A digital currency would make it possible for both out and to basically flush out and collect fines as soon as an infraction is detected. So imagine you jaywalk or you spit a piece of gum out, you get a little vibration in your pocket. Oh, we saw you do that. You just lost $50 worth of our fake digital currency.
Yeah, criticize the government. There's like AI systems running that will like catch it and immediately ding you.
Yeah.
And now you can't buy groceries.
Yeah, this is some really weird stuff. So I don't know.
With the programmable money that expires, their ability to control what I understand, like monetary policy, that's the point, to control kind of what's happening in the economy. But that is a level of control that almost feels like a simulation. It's like, at what point is the economy going to work in a healthy, normal way? Like everything is just so, and corporations do this with coupons, right? Like you want a $10 off coupon at the store, you got to spend it by this expiration date or else it's useless, right? It's a similar concept, but for a government to be doing that, it just feels really weird.
Yeah, and it's definitely creating a conflict behind the scenes, right? Like, so here, Janet Yellen just went on this tweet thread yesterday where she just went on and on and on about this idea that the IMF has been talking about with like the great quote unquote reset that they're talking about. And if we scroll down here, you can see, as I prepare to meet with my colleagues from around the world this week at the IMF and the World Bank spring meetings, I find myself thinking back to the policymakers who gathered in Bretton Woods a year before I was born to define our post-war order. And the IMF and the ECB and, the US, they are not being shy about the idea that a reset is coming. There's something big that is happening. What does that look like? I think about this every day, and I think it's gone from just kind of conceptually like this idea where people think it's crazy and they're not going to do anything too big, to I think what the most likely scenario is some kind of like IMF master digital currency. And then it's like pay to play, like depending on how big your economy is, every major economy is going to have their own central bank digital currencies, but it's all going to kind of filter up to the IMF, if that makes sense. But I think there's going to be some kind of weird like debt jubilee or some kind of reset. And I don't know exactly what that's going to look like, but I know I want to be prepared for that. And so I wanted to just talk about, even though most of this stuff is completely out of our control, as investors, what can we do to protect ourselves against all these possible outcomes?
Bitcoin.
Yeah. I mean, this is probably the strongest bull case I can think of for Bitcoin, right? Is as these currency wars heat up, and as you have, you know, China doing their just really scary shit, and you have the ECB, which is like just dragging their feet, and you've got, you know, Secretary Yellen talking about this and, you know, giving these signals that some kind of reset is coming. I think the smartest thing to do is to really take your own wealth into your own hands and learn how to be your own bank and self-custody Bitcoin. I think that, and obviously gold, you know, I have gold as a hedge, but Bitcoin way outweighs that. I don't know.
Yeah,
what
I
do you
mean,
guys think?
seeing these freaky things happen with money in China, and if there's contagion to other countries and they have similar processes,
Yeah.
that is a freaky thought that you would want some type of decentralized or, you know, sovereign money that you have the control over, that you don't have to worry about these things happening. So it does make sense that people focus there.
Travis, your mic on?
I hope so.
Kev, are we good
Is it
now?
working now? Hey,
All
I'm
right,
back in
he's
the
back.
game.
Sweet. So tell us why we're wrong, Travis. I want the counterpoint,
No,
or just whatever opinion you have.
I need to go read this tweet storm from Secretary Yellen because I haven't read it yet, oddly enough. But I want to, because I want to better understand what she's getting at here.
Mm-hmm.
The Bretton Woods thing is an interesting illusion, I guess you could say, because like you said, like the Bretton Woods was a pretty significant moment in time where people went off the gold, or countries went off the gold standard, right? So, and there were multiple Bretton Woods meetings, but essentially that's what happened post Bretton Woods, was that there were agreements to go off the gold standard, which I think ultimately was probably a good thing. But if we're entering a new phase of experiments, you know, that brings with it a whole lot of potential for like volatility from an economic perspective. I'm not sure I'm there yet in terms of like believing that there's going to be some great conspiracy with the IMF. Like I don't know. I just tend to think that.
Well, I don't think it's a conspiracy at this point, because they're actually, the IMF has come out and said we need a Bretton Woods moment for this century.
Yeah, I guess where I'm at with that is that countries still want control, sovereign control over their currencies. I'd be really surprised for G10 powers like the US especially to give up power to an organization like the IMF.
Yeah.
Like how many times have we done things on the world stage where the US was like, we're going to go our own way, right? Like the Paris Agreement on climate change,
Yeah.
stuff like that, right? So I don't know. I'm not convinced yet, but I'm open to the interpretations here of what this means, because clearly she's making some comments here that are pretty aggressive, or maybe that's not the right word. Very foretelling of something big. And I do think, you know, Yellen is so different from the Fed chairman that the Treasury secretaries that we've had recently, because she really is focused on things like wealth inequality and climate change, whereas previous Treasury secretaries were not.
Yeah.
So she's got a very different agenda that she brings to, and that, I mean, I guess that's why Biden put her in that position. But there is, if we're not as investors noticing these changes, and we've talked about the potential for inflation and different regimes moving from 10, 15 years of deflation to potentially moving into an inflationary environment, if we're not paying attention to these things, this is how you get left behind, and this is how you miss major shifts that can be multi-decade shifts. So
Yeah, and I mean, I agree with you. Like, I think the U.S. is not going to just give up, you know, world reserve, you know, status without a fight. Like, there's definitely going to be some soft power fights and some explicit maybe war, right? Like, the U.S., I think, is absolutely going to push their own central bank digital currency. China is already there. Europe maybe eventually will get there. There's governments around the world that are all competing for that. But the thing at the IMF level that I just don't know about is like the idea of like this great reset or like a debt jubilee. Like there could be a black swan moment that happens where like things just get disrupted kind of overnight. And I'm thinking through those scenarios. There's a bunch of ways that could go. And like, how do you protect yourself no matter what happens? For me, it's basically being diversified, like having Bitcoin, having gold, having physical land, also having like, I don't think the dollar is just going to die overnight or anything that's denominated in US dollars is going to be worthless. I actually want to own US equities or companies that are profitable. Like Coinbase, like cash cows like this that generate profits, right? So I think that's why we diversify and we don't just go all in, overexposed to Bitcoin or overexposed to gold or overexposed to dollars or some other fiat currency. How do you protect yourself no matter what happens, right? That's what we talk a lot about as traders too, is no matter what the market does, how do you plan your trades in a way that you're not going to get crushed because there's so much outside of our control. But I just think it's really interesting to see things heating up and China pushing this narrative very strongly and saying, yeah, we are actually trying to get around like US sanctions, and they're being explicit. They're actually saying that, right? Like, we're going to push this. We want to get out of SWIFT. We want to get out of all of the controls that the US has had and push our narrative into Africa and other areas to start using our currency. So those wars heating up are going to create a lot of volatility, I think, at a minimum.
To be seen.
Yeah.
I mean, they're not going to have any paper money.
Within
China's, for every digital dollar or digital yuan they create, they take out the actual physical dollar.
I think within a few years, most countries around the world are going to not have paper money.
How do you feel about that?
Well, that's why we need Bitcoin, right? And privacy coins. We need some kind of form. We need to divorce state from money. Like, we did it with religion. We need to do that with capital as well. Like, government controlled capital, there's so many issues that I see with that. And that's why we need, a hard money that is not, controlled by someone like the CCP.
I agree.
Not having paper money is going to benefit governments for sure.
Yeah.
I mean, so much shady stuff happens with
Paper money.
Like, people thought Bitcoin was that.
Yeah. No, paper money is such a better use for criminals, right?
Yeah.
But yeah, we do need non-government controlled hard money. Yeah. I don't know. Let's see what happens over the next couple of weeks and months. I think this stuff is just really heating up right now. Let's talk about some kind of other, I guess, macro stuff or just big picture ideas. We talked last week about Archegos. Is there anything else you guys wanted to talk about this kind of fallout? Is this sending any other ripples through the markets, or is it kind of a non-event at this point?
I'm not convinced that Credit Suisse is going to make it out of this without a capital raise. I'm actually a little concerned for Credit Suisse, to be honest.
Yeah.
I don't think they're on the verge of failure, but Credit Suisse also has another issue that it was dealing with fraud from a company called Greensill, which is not something that many people in the U.S. are familiar with, but this is a financing company that was a multi-billion-dollar. I mean, think like Wirecard or some of the other major frauds that have come about. Like, Greensill is basically faking a bunch of stuff and had fake receivables, like fake collateral. And now they're unwinding this multi-billion-dollar fintech firm, Greensill, this supply chain financing company, and they're finding all these weird connections to all these fraudulent people.
Oh, wow.
They're finding stuff that should exist that doesn't in terms of collateral or capital. So you got Greensill, which Credit Suisse is heavily involved in. Then you've got Archegos, which Credit Suisse was still liquidating, as of yesterday, still liquidating stocks that they had essentially lent to Archegos. And so what are they doing? Like, what is going on at Credit Suisse? Like, they are enabling incredible frauds. Archegos also, they have some really interesting things to answer for as far as propping up fraud stocks like GSX. There's a whole story here that we don't know all the details yet to. And like I said, I also looked at Credit Suisse's capital ratios, and if they lose 10 billion from Archegos and Greensill and maybe whatever else is happening behind the scenes here, they're going to need to raise capital. And if your equity starts declining significantly enough and you start having to raise capital, you could end up in a death spiral. Credit Suisse is like one of the major Swiss banks that's existed for over 100 years.
Isn't there a risk, too, of all of this causing people that bank with them to pull their cash out?
That's a run on the bank, and that's also a possible scenario.
Is this a possible Lehman 2.0?
Yeah, that's what I was going to say.
I don't want to sound the alarm bells too hard about that, but I think there is a non-zero chance that it is a serious problem that the market is now overlooking. And so Credit Suisse, the actions that they have taken with the Archegos situation, or have failed to take, like they were still liquidating stakes in companies like Farfetch and Viacom as of yesterday. Like you should have been out of that a week and a half ago.
Yeah.
You should have hedged that a week and a half ago. And there's a lot to answer for here at Credit Suisse as far as their decision making, their risk controls, the people that they're working with, like Bill Hwang, and giving him 5x leverage,
which is still mind-boggling.
Yeah, I mean, Credit Suisse their stock has just gotten destroyed over the past, well, really since the GFC, and it's not looking too hot.
I don't know. I mean, this is, I don't know how you recover from some of this stuff.
I did hear
from a
someone
reputations perspective
make a good point about the Archegos. Is that how you say it?
Yeah.
Why do you need that kind of leverage when you have billions and billions of dollars?
Yeah, I think that was the big question from last week, right? Is like, if you know, like a little drawdown is going to implode your company, like what goes on in the mind of someone?
Like you've made it.
Yeah.
I don't know. You've made it. Like why? It's a family office, right? You've made it. Protect the wealth.
Yeah.
Yep.
Don't destroy the wealth with risk. It's crazy.
I mean, I guess that goes to show you that, you know, even the people with the most amount of money can still do wildly stupid things in the market and lose large percentages of their money. It's not just small shitcoin traders.
It's an ego game for some of these guys.
I was going to say it's got to be the ego.
Yeah.
Yeah.
The whole thing is it just confounds me, and like the stuff that Credit Suisse did still confounds me, and it's not out of the question that there's more bad stuff hiding here, that there are other funds besides Archegos that have been extended massive amounts of leverage, could have forced deleveraging, you could have other fraud things that emerge from this, you could have Credit Suisse needing to raise capital while its stock is down in the dumps. I'm not sure it's totally over. I think there's a non-zero chance that more bad stuff happens here. Now, is it the next Lehman? I don't know if I'm prepared to say that, but Credit Suisse is in some serious trouble here in the near term.
They'll probably get bailed out, right?
Hey, we're printing trillions left and right. Yeah, why not? Okay, up next, I wanted to ask you guys, this was a chart that was going around that got a lot of love and a lot of hate.
The chart crime of Twitter.
So is this chart porn or is this a chart crime? And for anybody that's just listening to the audio, this chart is, it says the S&P may have just hit a new all-time high today, but if you put the index in relation to the Fed's balance sheet, which has been obviously increasing, it's trading at the same level as 2008. So equities have traded sideways since 2008, basically counteracting the balance sheet expansion. And then you can zoom in and see that, based on the way this chart is designed, stock prices are a way that this is calculating it are actually lower than 2008. Porn or crime?
That's so weird because when I look at my account, it's up, Chris. How can this be? This doesn't make sense. You might as well chart the S&P 500 against the number of ice cream cones sold, right? Like,
exactly.
You might as well chart the S&P 500 against, the number of COVID cases. The S&P 500 crashes compared to COVID cases. Like, duh. If you chart something that's not correlated directly to something else, then you can get funky, weird things happening.
Yeah, chart the S&P against corporate profits.
Chart against GDP even. I mean, even S&P related relative to GDP is kind of a weird figure because, like, for instance, do you use US GDP or world GDP? Mm-hmm. We know S&P 500 companies earn profits all over the world. So, like, even
it'd still be a better chart than this.
Yeah, it'd still be a better chart. You're right.
Yeah.
So what is the point that this person and people that are trying to look at this as a good thing? What argument can you make for this other than, just doesn't make sense?
This person... Oh, sorry.
I was going to say that the money printing is essentially subsidizing the markets.
Yeah, and that's what I wanted to talk about really is, people look at the Fed, and we've talked about this a lot over the past year because of all the money printing, right? Which is obviously a big deal and obviously not a good thing, but is looking at it this way, what are the problems with that? That's what I really wanted to point out.
When I look at how you actually go out and buy goods and services, it has nothing to do with the Fed's balance sheet. My account is up since 2008 very, very significantly, and I can go use that to buy actual things in real life. To me, that's the best way to, we still use fiat dollars to pay each other and to buy goods and services, right? So this is kind of silly. The other thing about the Fed balance sheet is that you also have a real base measurement problem here because the Fed wasn't doing QE very much before the financial crisis. And so the balance sheet has definitely grown massively, but they also reduced the balance sheet at times too. So like this is where the Fed was reducing the balance sheet, right? So you have these economic shocks, but then when the Fed is reducing the balance sheet, this thing, it's just, there's no direct correlation between the value of corporate earnings or the S&P 500 and the Fed's balance sheet.
Yeah. So maybe look at more like inflation adjusted type metrics, which again, is CPI really a good metric for that? You can make an argument against it.
No, and I think there's better other ways to measure inflation. You can look at a basket of essential goods and services or a basket for your personal spending needs, right?
Yeah.
And things like that.
Yeah. All right, cool. Next up, we've got Grayscale's intentions for a Bitcoin ETF. I don't think this is really a big surprise, but basically, this is coming down the pipeline. Trav, give us a date. When do you think the ETFs are going to be approved by?
Another bet.
I still think 2021 is going to be the year for a Bitcoin ETF.
Yeah.
It may be later in the year. But
I'm going to say middle of 2022. Okay. I'm not as optimistic for this year.
Yeah.
I hope I'm wrong, but I think maybe mid next year.
Yeah, that's also a pretty good guess because the current administration at the SEC was just installed, within the last couple of months with the new administration. So you're right. It may take them some time to get to this.
Yeah.
But
I don't know. Nick, do you have any opinions on this?
Well, I really wanted to point out how massive that this ETF would be if it does end up converting.
Yeah, good point.
It would essentially rank behind GLD, which is the Spider Gold Trust ETF, which is a huge ETF. So this is not peanuts here. We're talking if this does convert over.
Yeah.
And now, as far as people that got stuck paying the premium, right? I guess that's just kind of going to be a loss.
Yeah, and this says GBTC would rank second with 34 billion AUM behind the GLD and third in weekly volume. So yeah, I mean, and I think the reason why we like this is because we've pointed this out many, many times on the show is like we know what happened to gold after the ETFs came out in the early 2000s, right? Mm-hmm. Where for several decades before that, they basically did nothing. So yeah, I don't know. I get excited when I think about this.
I think it's very exciting.
Yeah. Awesome. Okay, cool. A couple other crypto news pieces, and then we can jump into some Q&A and look at charts and some altcoins and stuff. So Signal. Okay, so what was it? A few months ago, the world woke up to the fact that, if you were asleep at the wheel, you can no longer trust Facebook. I know it's a surprise. I know. But, en masse, people were deleting WhatsApp and Facebook Messenger. And, even Elon was tweeting, download Signal, use Signal, end-to-end encryption. And, they propose themselves or put themselves out there as this nonprofit. Well, unfortunately, guys, as of today, they made an announcement that they integrated with cryptocurrency, but they did it with a shitcoin.
Oh, no.
I'm like, you guys really couldn't have even started with Bitcoin. So I don't know. This is just a disappointment to see them go with, kind of an unfairly pre-mined shitcoin.
Is this their own shitcoin or is it some other shitcoin that they
No.
Are they just partnering with the shitcoin?
Yeah. And look, it's just a disappointment to see them put themselves out there as this cypherpunk mentality, encrypt your data, blah, blah, blah. And then, oh, by the way, our first partnership is going to be with this shitcoin.
So can we still trust Signal?
I don't know. I don't really trust anything anymore.
So how do we communicate?
Yeah. PGP. Yeah. I don't know. I mean, I still think the product's good, but it's just disappointing to see them do this.
Yeah, interesting. I wonder why they chose this. They must have been incentivized in some way, or they must have known the project developers or something.
Yeah, I haven't even looked into the details yet. By next week, I'll have better formulated.
So the Signal will integrate with Apple Pay to be able to purchase the coin. Is that what I saw? Or no?
No, this article is using the example of what Apple does with Apple Pay Cash.
Okay, got it.
And then so the kind of the sister article to this today was Facebook confirms that they're testing Venmo-like QR codes for payments. So, you know, this is another place that we're actually kind of trailing China. Is like in China, everybody uses QR codes, right? Granted, it's on like Alipay and WePay and shit, but you know, this is where the U.S. is going, is we're trying to play catch up with this. I just want to see, you know, like a company like Signal. I'm like, dude, you just use Lightning Network with Bitcoin, or, you know, some other
A top 50 coin.
yeah,
perhaps, you
yeah,
know?
exactly.
Built for payments. Yeah, it's interesting.
So, I mean, it's good to see that, you know, this stuff is continuing to develop. And, you know, last week, the big news through PayPal was, well, they're going to actually let merchants accept Bitcoin and crypto now. And so these are all steps in the right direction.
Yeah.
It's just, you know, sometimes these companies or organizations just kind of let us down.
They make weird choices.
Yeah.
Well, hopefully that's a choice they can reverse, or maybe they'll get feedback on it from the community that says, hey, why are you using this? Like,
Yeah.
use something with better rails. Interesting QR codes I have noticed got a big bump from the pandemic with mobile, or not mobile, but a lot of restaurants menus being put onto QR codes. Essentially, you just scan the QR code with your phone and it pops up the menu. And I think that's a big use case that's been pushed from the pandemic.
Yeah. There's a Austin startup, I guess. Yeah, maybe there's still a startup called Tabbed Out. And it's an interesting case where, like, say you go to a bar or like an outdoor restaurant, they have the QR code and you can just order and then they bring it to you. You know, it gets rid of like the annoying, like having to go to the bar or having to wait for the waitress, and then there's all that back and forth. I like that experience a lot more.
I would love to see Europe do that.
Yeah.
I love and hate the European dining experience. Obviously, when I say Europe, that's a very broad geographic area, so I'm sure it's better in some areas and worse in others. But
Yeah.
like, go to Italy or Spain or even the UK, and like you sit down for a meal, and the whole culture is very different there, because they'll let you just sit there for like
A long
hours on
time.
end without getting your bill.
Yep.
And I'm like, can I just pay out and like go when I want to?
Typical impatient American.
Yeah, I was
Yeah.
gonna say very American of you, but no, I agree. I mean, that's just how Americans are. We're used to the quickness of service and
Yeah.
being able to get out when we need to get out.
Yeah.
And it is very different.
Even
over
in
there.
America, though, I find times where like the server forgets about you and then is off doing who knows
Yep,
what,
yep.
and you're like, I just want to leave.
Yeah.
Like,
Or
I
if
just
you
wanna pay.
want to order another drink, right? Like now at most restaurants, you can just order it. You don't have to wait for.
Yeah. Instant gratification.
Man, it's
I
just,
want it now.
It's just getting more and more ingrained into our lives. We're gonna be the most impatient humans ever.
Well, it is. I mean, we're already seeing that with, you know, our generation and lower, like Gen Z, especially with, you know, TikTok and stuff. Like, what I wonder what the average. I know when we were in like high school and stuff, there were articles that would come out like talking about our short attention spans.
Yeah.
I think now it's like, you know, they used to say you have in marketing, you have 8 seconds to catch someone's attention. Now it's like 0.8.
Yeah.
Like,
Yeah.
Is
not
your
even a full
thumbnail
second.
photo correct? That's it. That's all
Yeah.
you get.
Right.
I mean, it is nice though. Short, quick content. Like that's why TikTok is doing so well, is because people can literally just get to it quick and learn a ton if they're following the right people.
Yeah.
And it actually is very valuable.
I guess it does cut out a lot of the bloat
Yes.
and BS, right?
Yeah,
You
and,
get,
like,
get
you-
to the point kind of thing.
I mean, you've watched videos on YouTube. We all have, and we're like, can you just get to the point? Like, and you skip forward. You just
Yeah.
want to hear the meat.
Yeah,
And that's why these short format videos are doing so well. YouTube's trying it, Instagram's trying it with Reels, TikTok's doing it very well. And because of our short ass attention spans.
Yeah.
Yep. Yeah. Speaking. Oh, sorry, I just lost my attention.
What were you saying?
Okay. Next up, this was actually another thing that I think Yellen was talking about, is setting a floor, almost trying to like price fix between governments' corporate tax rates, you know, because there is a lot of arbitrage happening right now. So I think maybe that'll be something that gets kind of slid into this new world order and reset.
Well, I think what a lot of people don't realize is like tax rates are actually when we had a 35% tax rate in the US, we were not competing against other countries that had much lower tax rates. I think the average tax rate in Europe right now, corporate tax, is around 20%. And so now we're talking about going from 21 to 28, and 28% would still be competitive with other countries. 35% was too high if you look at other countries.
Yeah.
And I think a lot of people don't realize that corporate tax rates all over the world are actually a lot lower than they think. I know it's easy to hate corporations, but like even Europe realizes and recognizes that the low corporate tax rate is going to help the economy and jobs and growth and whatever.
Yeah.
So I think that the increase, a lot of people are up in arms about going from 21% to 20%. And granted, yes, that is going to hurt corporate profits. At least in the U.S., they had a nice run with the tax cuts at a 21% tax rate. But I think we're still staying in that competitive zone. And I don't know what Yellen suggested to be the floor on the corporate tax rate.
I don't know if anybody that's listening knows, feel free to put it in there. I don't think she said anything specifically, but I think it was, hey, let's have like a price fix amongst major economies. That way, companies don't try to get around the rules or.
I don't know how I feel about that, though.
Yeah.
I feel...
It's futile.
I feel...
Futile. How do you say that? Futile?
Futile.
I never know how to say that word.
Yeah.
Go ahead.
Well, it's game theory. All you need is a couple defectors, right? So this is just pure game theory. And even if you can get a lot of the G10 or G20 countries to initially agree, at some point there'll be a defector. And then you've got to play tit for tat, or you've got to, figure out how to like solve the optimal game theory solution here. But, this whole thing about countries across the world agreeing to do this is like
I don't think it'll
pipe
work.
dream. Yeah.
Yeah.
I mean, it's not a terrible idea in some sense, but it's just probably
I think it's actually going to go the opposite direction, like with governments having to compete more for talent and capital. Like you said, it only takes one or two defectors, and then like all the smart capital goes there.
Every country has a different economy, different, economics. And for one country, they may not be able to afford lowering their corporate tax or increasing it because they'll lose all the people that they have or all the corporations that they have. So it's definitely very variable.
Yeah.
I mean, don't we love competition? I mean, we're capitalists. Like we
Absolutely.
like competition, and I think allowing countries to choose their corporate tax rate that works for their economy is good.
Yeah, and we got a comment in here says the big companies have their own tax rep. It really hits the medium and smaller companies. Yeah, I mean we saw Facebook move like a massive percentage of their, well, I don't know what percent, but a large portion of their business to Ireland, right?
Because they have a low, I think it's like 12%, 12.5% corporate tax rate in Ireland.
Yeah.
So that's pretty darn low. And definitely appeals to a lot of corporations. But now with the new administration is talking about a minimum tax on any overseas capital or profits.
Yeah.
So basically, I think it's going to be like, I don't know, 10% or something like that. Right now, if once those profits have to be brought back to the United States to be taxed, and that's why a lot of corporations keep money overseas. But now the Biden administration is trying to get on top of that and get more revenues, tax revenues coming in from corporations that are sheltering profits elsewhere.
I don't think that's the worst idea either. I mean, they have the AMT for individuals. Why wouldn't they have the AMT for corporations?
Very
right?
true. Very true.
Corporations are playing all these games, and they have all these subsidiaries, and then they have capital that's trapped in certain countries because they don't want to bring it back to get taxed. It's like, can we just stop playing all these games and have a reasonable low minimum tax rate?
It'll incentivize corporations to think twice about that, and then maybe it will, they'll, we're gonna have to pay the minimum tax anyways, we might as well bring the profits here or have the profit, and pay the tax.
Yeah. Well, I guess we'll see what happens. I personally, I hate taxes. I hate talking about taxes. I know it's the biggest expense for most people in their life, and I am all for people gaming the system. Actually, I am all for figuring out a way to pay the least amount possible.
What if I told you that theoretically no one has to pay taxes?
Yeah, theoretically,
sound to you?
nobody.
Well,
has
yeah,
to.
of course. There's always a way.
Okay, now what if the trade-off is that your purchasing power is slowly eaten away by money printing? Because that is
It's already happening.
Well, right, I know, and that's
Or you go to jail.
That's because the taxes aren't funding the spending. But you could drop tax rates. Theoretically, you could drop all tax rates to zero and just fund government spending out of like taking purchasing power from everybody, just increasing the money supply by the amount that the government needs to spend every year. Tax rates give kind of a buffer so that we don't entirely use, money printing as the full engine for government spending. And it keeps them honest in some way because they have a number that they look at where the government is like, oh, we have X amount of tax revenue. Oh, well, we want to spend this. Well, we better at least get it somewhere aligned with tax revenue at some point, although lately that hasn't been true.
Well, have you heard of this thing called MMT?
Yeah.
Apparently, spending doesn't matter
Yeah.
anymore.
So that's obviously silly. That idea
Yeah.
is silly. I think there are some ideas within MMT that are actually very interesting, and we're going to play with those experiments in the next couple of decades.
Yeah.
But
We're gonna find out.
there is a limit. I believe there is a limit, but I always thought it was interesting when you realize that governments don't actually have to tax to spend. They can do the spending on their own without having to worry about the taxation side if they wanted to.
Yeah, they're doing it right now.
Yeah.
But then the risk is what people are waking up to right now, which is, okay, well, what really is the value of this printing? What does this dollar, euro, or yen actually represent?
And that's the trade-off, because you essentially are taking money from private sector and reallocating it to government spending. And that's going to distribute purchasing power away from private sector into public. And I happen to believe that the public sector has a critical or several critical functions, but I also believe they need to be a lot more efficient with it. Like roads and bridges and militaries and things like that. Like there's things that you can make a good argument for, but there's a lot of governments not doing that spending well, like when you have a $500 toilet seat, or what are some of those egregious examples of, it costs how many billions of dollars to make one part for, an airplane, in the
Or how many trillions do we spend on, foreign military bases and things like that?
Exactly.
Yeah.
But I don't know. I always like the idea that technically you could drop taxes to zero and then just fund
Print away.
government spending out of taking purchasing power from everybody.
Yeah.
But taxes in a way are that buffer that kind of keeps people in check. So it's like, how much buffer do you want versus how much, free will to just spend whatever you want and just take it from everybody else.
Personally, I just don't want to pay any taxes if I can legally do that, right? And there are ways to structure financial plans and things to really leverage deductions and corporate structures. And yeah, I think everybody should do what they absolutely can within the letter of the law to try to minimize it, right?
I
For
think
sure.
the first step is you wouldn't believe how many people do not understand how their taxes are calculated in the first place.
Yeah.
And I think that that's like the first step. Like once you understand the process of how your gross income goes from gross income to taxable income, there are a lot of things that happen along the way. And understanding that process really opens you up to being able to confidently tax plan.
Yeah.
And with investments and whatever else it is.
Absolutely. All right. Well, moving on, let's talk about something a little more fun. And guys, I don't know if you can believe this. I know we didn't predict this at all.
It's like you maybe could have said this in a We Talk Money episode a week or two ago.
Yes. NFT prices crash. And it stirs a debate on whether the stimulus-led fad is over. I like how they put that in the headline. But yeah, average NFT prices are down almost 70% from their peak. Some commentators say innovative market is here to stay. Yep. Basically exactly what we said, right? Like, if you look here on nonfungible.com, you can see, again, this is kind of short term. This is only going back a few days or weeks. Number of sales has fallen quite a bit. Sales USD amounts fallen quite a bit, volume-wise, active market wallets. So this is just like any typical kind of boom and bust cycle, right? NFTs went mainstream about a month or two ago. Prices went through the roof. things are still hot. I mean, things are still selling, and you know, you're seeing CryptoPunk selling for hundreds or thousands of ETH, and you know, there's definitely a lot of hype still out there. But you know, one thing that I heard Mark Cuban recently talk about is, you know, just the real world applications outside of like this art stuff, like thinking about the secondary market for tickets to games or concerts, how if you have that on a blockchain, you can build in like you can program transfer royalties. So if you want to disincentivize scalpers from marking up the price of stuff, you can make a really high royalty. Like there's things like that you can do for, you know, think about non-fungible token. Well, that could be a ticket to get you access to any event, right? And you can play with the mechanics of the code and programmatically incentivize or disincentivize certain behaviors based on that. I think that's pretty cool.
I do too.
Yeah, imagine if PlayStation or Nvidia, you know, with like PlayStation 5 and like the new GPU cards, like if they could basically sell tokens which got you access to one of those products, and they disincentivized scalping, and they made it so if you try to resell that token, right? Like these are just ideas, and granted there's a challenge between, you know, like digital products connecting that to the physical real world, but when we work through those problems, I think it's going to help make like just traditional markets a lot more efficient, like consumer product markets more efficient.
Yeah.
Very interesting. I've been scratching my head about this stuff. I'm trying to be hip and cool and understand. I get that it's nice art. I get it. But I was trying to figure out, like, why are people spending millions of dollars on a CryptoPunk? Or right now, there's CryptoPunks that are tens of thousands of dollars, 40 grand for a CryptoPunk. And I'm like, okay, Nikki, you've got this. Are people just spending this kind of money just to be a part of the movement of having a verifiable transaction that is unique on the blockchain? Is that why they're doing this? Like, or are they truly doing it for the art?
I would guess that very few people look at this and say, yeah, it's actually worth that to me for that piece of art.
What is the value?
I don't know if anybody in chat's listening to this.
What is the value is what I'm trying to figure out.
Yeah.
Right?
There's some market participants for this is just where it's just purely speculation.
Yes.
Okay.
I would guess, if I had to put a number on it, I would say it's 75 to 85% speculation. You have like the true art, like economy, right? People that truly love art, and they're probably going to buy and try to actually collect and hold for a long time.
Which, you know, digital art, I totally can see how that could be a thing from a unique, popular artist, you know, and you get that digital art and you own it. Like, I get that. I guess when I look at the CryptoPunks, it's harder to understand.
Yeah.
It's
well, and that's why I said, like, look, I'm not really into art, just even like regular real world art. But what I do think is really cool is collectibles when it comes to like digital worlds and video games. I think that has a much bigger use case. But yeah, art, I mean, we've talked about this, like there's probably some money laundering. There's probably some other nefarious activity happening there. Some people probably really do look at, you know, an image like that and say, yeah, that's worth $1 million to me. I don't know.
Even though they can screenshot it and put it up on their desktop.
But I mean, that argument's kind of been, you know, overrun. Like, it's like, you know, yes, there are digital copies of the Mona Lisa, right? Or there's physical printed copies of the Mona Lisa, but there really is only truly one. And things where there is true value, where a group of tens of thousands, hundreds of thousands, or millions of people look at something and go, yeah, that is the shit. That thing is cool. That does have inherent value. But again, that's why I'm more excited about these real world use cases of like tickets or event stuff or games or digital worlds. Like, I think those are much more like sustainable over the long term.
Like, I saw the Kings of Leon, which is a band, they had sold a digital album.
Yep.
And I think the digital I'm not sure if that digital album was like only, you know, those 12 songs are only going to be for that person that owned it and they didn't release them, or I didn't know, but that's a cool idea, right?
There's ways for creators to incentivize and create their own economy.
Yeah.
And I think that's great because, like, what was it back in what was the heyday of music? Basically from, pre-90s, right? Where, or maybe even into the early 2000s, where artists actually made money from record sales. Nowadays, it's like they're trying to get money from YouTube streaming ads or, Spotify deals.
Concerts when we had those.
Yeah, I think the number was 80 or 85% of musicians' revenue was actually concerts. So album sales were a lot smaller, but nowadays they can take control of that and interact directly with their fans and offer different levels of interaction and, experience direct to fan. I think that's the coolest thing. And Kevin Kelly, who wrote the famous article about 1,000 True Fans, he's also been talking about some of this stuff. And I think there's a lot of use cases for NFTs. It's just the art stuff. I think that's where you're going to see the biggest volatility. I mean, that's true in the real world too, with real art.
Yeah.
That shit is super volatile.
True.
But games, the bigger a game becomes over time, interactive worlds, verifiably scarce land and things like that, I think are pretty dope.
I can see it in the gaming world, and we've talked about this, but I can see that use case for sure.
Yeah.
That more so than, the crypto punks.
Yeah.
But
so Damon said the thing about the CryptoPunks is that they're the very first NFTs, so there's historical significance. Yeah, there might be something like there as well. And I know CryptoKitties, like I played around with that a little bit, but again,
did you buy a CryptoKitty?
Yeah, I made some and bought some, and I never was like, okay, this is something I want to speculate on. I can't find an edge in it necessarily, but
that's a really interesting comment though, in the sense that original NFT class is perhaps going to be one of the most valuable classes of NFTs possibly ever.
Yeah.
And that may be a reason why people are willing to spend 4,000 plus ETH for the CryptoPunks or CryptoKitties, because now you have the opposite problem with all the new flood of supply of NFTs coming to the market, which are going to be kind of similar to what we saw in the ICO boom. Earlier ICO projects probably got more eyeballs, higher gains. Then you started to really get the trash stuff, or just the, lots of other new projects coming on that just went nowhere.
Yeah.
But original stuff, even though it may not be technically as good or even from an art perspective as beautiful as some of the stuff that comes later, just because it's early. It's kind of like baseball cards too. Like no one cares about Babe Ruth or Mickey Mantle today. Like most people probably don't even know who those people are, but those are the most valuable baseball cards.
Yeah.
Honus Wagner, I think, is the most valuable baseball card because it was like one of the very first baseball cards ever made.
That makes sense.
Yeah. Early mover advantage for sure.
Yeah.
But again, that's why, like, I don't know. I feel like, things where it comes down to like video games where you could actually have an experience with it, or, have a resale value of something that's growing over time. I just kind of lean into that a little more.
I agree. We're like still, I feel, in inning 1 or inning 2 of actual utility in cryptocurrency, whether that's STOs, NFTs, privacy coins, outside of like store of value. There's still smart contracts, obviously. So that's just probably in inning 2 or 3. So there's still so much interesting innovation and utility that is yet to come in cryptocurrency in so many of these different areas that I'm going to be so fascinated to watch over the next couple of decades how it evolves, because it's going to look nothing like it does today.
Yeah, we're just getting started, man. I mean, I feel so lucky to be living during this time, right? Like where, this is like the biggest shift and the biggest reinvention of how humans look at what real money is.
Yeah.
And understanding that like government printed currency isn't true money, right?
Yeah.
It's like, and then all the gold bugs are fuming because people are kind of leapfrogging gold. But I still think gold has a use case, and I think it's, it has obviously a long history. I want to own some, diversify in it, but I'm not going to put my whole portfolio in it.
Yeah.
Yeah. Cool. Well, let's take a look at some charts, and then if you guys have any questions, feel free to throw them in there. Again, really not much to talk about with Bitcoin. It's dead flat from where it was last week, which is nice. I like when prices consolidate. We've had such large growth, and consolidation is actually healthy.
I don't know. That's starting to look a lot like the NASDAQ. That nice coil action.
Yeah,
Coil
dude.
pattern. Clear trend line
For the
of
S&P too.
resistance and
Yep.
support.
Got Ethereum, which is also challenging the all-time high up here in the low $2,000 range. Yeah, we've also seen just a lot of like older altcoins popping off recently too. Over the past week, just a lot of breakouts, a lot of things that are starting to show uncorrelated moves with Bitcoin, which is always nice because, Bitcoin, I use the analogy, it's like the DJ, right? It's playing the music and it sometimes will decide when the party's over and will stop the music and everything goes crashing along with it. But there's healthy levels of capital coming in when you get different projects that are moving independent of the Bitcoin trend. So I've seen that a lot more over the past couple of weeks, which is a good thing to see.
I love that analogy.
Yeah.
What has been happening with BNB? Is that just a technical breakout? Was there anything fundamental behind it?
Yeah, I mean, it's, Binance is just a wildly profitable exchange, and
Could the Coinbase stuff have anything to do with it? Maybe
there's probably a sympathy play there too. Yeah. Basically from 2018 to the start of the year, it had a massive range, big volatility on a percent basis. And then once it broke the all-time high around like $45-50, just went crazy. And you can see it had a really nice bull flag continuation pattern through $300. Yeah. A lot of other things have been moving really big too. Even Litecoin today. Litecoin's challenging the
Litecoin.
Yeah.
I forgot about Litecoin.
a lot of people did. I mean, look,
It looks pretty healthy.
It's not quite caught up with Ethereum yet, but there's a lot of coins like this that are either challenging all-time highs or hitting new all-time highs. Link was another one. This has been in the news recently, and we obviously bought the $5 breakout, and I'm still holding a quarter runner on this. So still a lot moving. I mean, I think
Nice.
we're well within a full bull alt season right now.
Yeah, a lot of those charts look nice and healthy.
Yeah.
Some people thought we'd never get another alt season. Well, look at us now.
Hey. Okay, let's do some questions, guys. Robert was asking, do you have any thoughts on Bitcoin dominance falling? Yeah, I mean, that's kind of what happens during alt seasons, right? Like, I don't have the chart up right now, but when you have a whole lot of old and new projects that are gaining value pretty quickly, that brings down Bitcoin's dominance. And when things start to deflate, usually you see Bitcoin's dominance start to rise again. So I don't know. Will that stay at its current level forever? I don't know. That's the $100 trillion question, isn't it? At which point does capital flow back into Bitcoin? So that's a good question. So typically the way that capital moves into crypto is step one, it goes into Bitcoin, right? People buy Bitcoin, Bitcoin goes up, and then people go, oh, if I made money on Bitcoin, I can also make money on other cryptocurrencies or crypto assets, whatever they are. And so typically what you'll see next is Bitcoin will consolidate or pull back, and then you'll see other large cap cryptos start to pop. We call it popcorn season. It's like the early days of an altcoin season where things are kind of quiet, and then all of a sudden you see Ethereum pop, or you see, Litecoin, or you see some of these older coins just start to break out of their accumulation ranges. And then that capital kind of filters down into higher risk, more speculative stuff, right on down to the shit coins. And again, on this show, I always like to say, like, we do not invest in most altcoins because most of them are going to fail. We trade them to accumulate more fiat and more Bitcoin that we can reinvest for longer term holds. So altcoins are a dangerous game. A lot of people lose money in them. If you understand market cycles and trading plans and TA and how to really just read market dynamics and the emotion behind price, you can do well. But people that go on these, leveraged exchanges, 99% of them blow up. So just be careful out there, guys, when you're looking at trading alts.
Nick, I feel like we have a little bit of a popcorn season in stocks too, when I think about it. Even going back to like the .com bubble, early internet .com phase, there were companies like Yahoo and Amazon and eBay who had real businesses they were building. It was still very early days, but they were building the early part of the business. The stocks did super well after IPO. And then you started to get the real trash IPOs in like 1999, 2000. Eventually the market crashed. Even recently, companies like Apple, Google, Amazon, Facebook, these are your core big techs, and they performed really well in the last 5 years essentially. And then we started to see a little bit more hot money flowing into stuff like SPACs and Momo plays and junky little stocks that would, all of a sudden buy a few Bitcoin miners.
Small caps.
yeah. Small caps.
Biotech companies.
Biotechs, weird stuff, frauds. And
Very true.
And then we just had this kind of a really short outflow of capital out of the NASDAQ that started to, but you actually saw that capital flow back into Apple, Google, Microsoft, and Amazon, which held up really well during the most recent market correction. And you had other stuff that was down 30, 40%. So it was like the big guys, like they're kind of like the Bitcoin of the stock side. And then all the other stuff is sort of
The
your
altcoins.
altcoin side.
Yeah.
Really good point.
I don't know. Interesting kind of analogy between the two asset classes.
Yeah, and I've always said every dog has its day in the markets. Like this has happened. I've been over a decade plus. I've seen this happen where the biotechs and the small caps and maybe some of the value stocks and they pop and it just rotates and then they die off and then everybody hates them and
Yeah.
and then the market the FANG is breaking out to new all-time highs, and there's always an ebb and flow, in all markets.
And if you can get a grasp on that ebb and flow, I think that's where you just kind of get in sync with the market, right? And I hear this all the time from people that are like new to trading and investing. They say like, Chris, I just feel like everything I do, the market does the opposite of that, right? And that usually means they're either chasing other people or trying to follow the herd or just not really in sync with the market. So like, what advice, or not, I guess advice, but what tips or just like ideas would you have for somebody to actually get in sync with the markets?
I think that screen time is essential, and understanding that market environments are a thing.
Yeah.
The market is not going to be the same all of the time. And a lot of people expect that. That's what they want to happen.
Yeah.
And a lot of people that traded and invested in 2020 are struggling now in 2021 because shit's different.
Yeah.
Already.
Market's always changing, right?
Yeah. And so think market environment. Look for the signs that the biotech season is popping off, or, these small caps are starting to get love, or the momentum stocks are having a lot of capital go into them. Like, you have to learn to recognize those signs and know when the music is going to stop. And a lot of that comes with, paying attention to different indicators like volume indicators and looking at price action and understanding technical analysis to be able to recognize the actual price action.
Yeah.
But a lot of times screen time is your friend. Like, back test. Look at what's happened. Look at a monthly chart. Look at a daily chart that goes back 20 years. Things don't always stay the same.
Yeah. Yeah, it's like there's no shortcut for experience, right? Like you can, if you want to be like a professional golfer, you can watch all the videos in the world of how to play the game of golf, but you have to go out there and put the time in and focus on developing that skill before you go to a tournament to try to play for big money, right? A lot of people just try to jump into the markets, like just going straight to the tournament, just big money tournament. I don't want to do the skill development. I don't want to learn the foundation. I don't want to put in the screen time. And they end up on the wrong side.
Yeah, I mean, they think that it's easy and they'll get it. And the market eventually shows you that it's not.
Yeah.
And you have to put in the work.
Yeah, you can get lucky during bull markets, right? Everybody's a genius when everything's going up. But how do you manage risk? And how do you not get destroyed when things pull back? And maybe even make money as things come down. Yeah. Awesome. Well, we've got a few more questions in here. I saw quite a few questions and comments about Ethereum, like gas fees. So the Ethereum network right now is super expensive, super congested, which is true, which is, what they're trying to solve with ETH 2.0. And there's a lot of competitors, right? Like that's what I think is so cool about the crypto space is innovation and competition. I think it's just a net benefit for everything. Have you used Uniswap or any decentralized exchanges? How do you like them, and what would you like to see improve? Yeah, I mean, I have used Uniswap quite a bit, and I think decentralized, we've talked about this quite a bit. Decentralized exchanges, I think, are going to, over time, capture more and more of the trading volume. And there are some limitations right now, and I think they're not perfect, but I think it's a good start. And I just want to see them continue to improve. It's obviously a different trading experience than if you're used to like a time and sales and order book and, real-time price action. It's not quite as efficient yet, which is where with inefficiencies and kind of early markets, if you know what you're doing, that's where you can actually make a lot of alpha, is when you have a market that hasn't really figured out all the, the small moves and all that stuff. So, yeah. Do you worry about crypto influencers spreading hopiumistic claims about a quote-unquote super cycle, leading noobs into believing there is no need to take profits over the next few months?
That goes for everything.
Yeah.
That goes for all markets.
See, that's actually a great question. And yes, there are a lot of moon boys out there, as we call them.
Yeah.
These fucking guys on YouTube that are brand new to the markets, came in, a lot of them, the height of the last market cycle. Like if you look at some of their channels, their first crypto videos were like December 2017 at the height of the market. And all of a sudden they're like geniuses. And they tell people, yeah, listen, no need to take profit. No need to think about risk management. Yeah, go use those leverage trading platforms. Use as much leverage as you can. Don't worry about selling. I won't sell if you won't sell. This mentality gets people hurt, and I hate it.
Mm-hmm. Yeah, same.
As somebody who's been in this space since 2013, I just think it's disgusting, honestly.
I mean, that stuff's been happening on the stock side too. I mean, look at GameStop.
True.
People are mooning that and don't sell. I don't care what your financial situation is. Don't sell the shares. And
it's that whole I won't sell if you won't sell kind of thing.
Yeah, and the TikTok investors talking about how easy things are, and it's a dangerous narrative, I think.
Yeah. All right. Whenever I take 1 to 2 weeks from looking at the market or charts, I make better decisions and find TA I didn't see before. Yeah, that's a great point. I mean, I think people that get tick locked, it's really easy to get overly focused on the markets. And sometimes when the markets are consolidating or not really doing anything where they're trading with conviction, sometimes the best thing is just to step away. Take some time away from the markets, because if you get tick locked and you move too close and you zoom too far in, you're going to over manage trades or get sucked into low probability bad trades.
You're going to pull those stops up.
That's right.
And get stopped out.
Awesome. Well, what are you guys looking forward to next week? I know stocks popped. Got the NASDAQ challenging an all-time high. Bitcoin has been chilling for a while. Alts have been popping. What are you guys looking at?
Is earnings season kicking off next week?
It is.
I'm looking forward to earnings season.
The big banks are kicking off earnings season, I believe, next Wednesday or so. And we'll get the bulk of companies really start to report like the third week of April and beyond. But I don't know. I'm not as excited about this earnings season. I'll tell you why.
Uh-oh.
Because, well, this Q1 and Q2 earnings season of 2021 is going to be so weird. You're going to have these weird base effects for a lot of different companies where their business fell off a cliff early pandemic, right? And their Q1, Q2 numbers are going to look insanely good. Such and such companies growing 80% year over year. And your moon boys on the stock side are going to be talking about these numbers, acting as if these are like normalized numbers, right? And there's just going to be a lot of BS, especially with growth stocks, about how so-and-so company is just killing it, growing 80%. Well, yeah, their revenue was down 80% in Q1 last year. So, like, it's just
you got to look at it relative.
I think that's why I'm excited about it, because I'm excited to see how stocks move. I mean, I think 2021 is going to be the real test of how these stocks react to these earnings reports that are going to be very strange, you know?
Well, I know we joke about this, but real question, do earnings even matter right now with the stimulus, or is it like the check is coming due?
Yeah, I think especially as we move into like Q2, Q3. Right now, though, the economy is so hot, it's at least North America, all the things that we're looking at, like macro data points, for instance, like the ISM manufacturing gauges or the ISM services gauges hitting like all-time highs. Like, I mean, and that again is partly due to like having base effects of last year where things were crushed at this time last year, and now all of a sudden your year-over-year comparisons look amazing. But that's why I actually don't know if the earnings are going to matter so much in the short run as they'll matter more as we get into the later stages of the year, because especially for companies like the reopening trade plays, like your travel companies, your airlines, your restaurants, your retail, all those stocks, many of them are trading well above their pre-pandemic levels. So when the reality sets in, especially when the comparisons get harder, Q3, Q4, and into Q1 next year, I wonder if those stocks are going to start to falter.
That's what I'm thinking. You know, I mean, a lot of things are just so priced in.
But I don't know if the earnings in the short run are going to matter all that much. One, because you're going to have these weird base rate effects. But two, also, like you said, there's just so much momentum behind everything right now from a money supply perspective, from a demand perspective, from commodity prices, supply chains. I mean, you mentioned GPUs earlier. I don't even know how NVIDIA is going to have revenue for GPUs because I can't seem to find anywhere that's selling them. Like,
Yeah.
I genuinely am like, when are they going to make GPUs again? I mean, I don't know. Like,
The scalper bots are still getting them, right, Kevin?
are they? Okay, I need a scalper bot.
Yeah, I don't know. Let's look. You know what I haven't looked at is lumber.
It's all-time highs.
It did. Okay, so it
Yeah.
is holding up about
Good
above 1,000.
grief.
Yeah.
Yeah.
What a nightmare.
yeah.
Yeah, for
Imagine trying
anybody
to build a
that
house.
that's trying to build a house right now, like look at this pattern. Like, you know, again, like lumber and commodity charts aren't as predictable as some other markets, but this is looking like it's primed for a massive breakout.
I feel bad for anybody that's building a home right now.
Yeah.
It's just a mess. Between the low supply and the high commodity prices, I mean, Jesus.
Yeah.
What's going to happen when rates tick up again and commodity prices normalize?
Yep.
You know, the value of your home basically could end up declining.
Yeah, I'm conflicted right now. You know, we've talked about this the past couple weeks about the housing prices here in Texas and especially Austin up 25% year over year. And I've been talking to some friends recently that are trying to chase that game. Yeah, man, I bid 100,000 over asking or 200,000 over asking. I'm like, wow, okay, how does this end, right? Like,
yeah.
There are some differences this time. I know this time is different, but you know, the lending standards are still a lot stricter. Prices are going up because of demand, not because of speculation. That was a big thing that we saw in the early 2000s boom and bust. Was it was mostly overbuilding and over speculation. Now it's undersupplied and over demand. So I don't know. The prices could keep going higher much longer than seems rational, I think.
Yeah, especially if you've got, I mean, property is a hard real asset, and land is scarce versus a money supply that's less scarce. So
Yeah.
in nominal terms especially, I don't see why prices couldn't keep rising, at least in certain geographic areas.
Yep. I want to go hunt for the next Austin.
Yeah.
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 I was just thinking, like, is there a case, though, for the long term with all of this and prices getting bid up 100,000 over asking? And, you know, is there a case that long term homeowners may not see the appreciation when you annualize it, you know, over 20, 30 years that we've seen in the past because they paid so much, or, you know, for their home?
Well, I guess that, you know, that all depends
Over-
on future inflation. And, you know, we're starting to see increased ticks in that. And who knows what's going to happen with the coming currency war. And I don't know, things could get weird. I can't even think about home prices more than a year or two out, right? So many variables there.
Yeah. Supply is a big one too.
Yep.
With lumber being so high, it's not getting cheaper or easier to build houses, that's for sure.
Yeah, just got a comment. Robert said, I'm a realtor in Florida and new construction homes are delayed for months because manufacturers are behind schedule. Dumb stuff like garage door openers. Yeah, even like on the RV side, I know RV manufacturers can't pump out and keep up with the demand because of like stuff like refrigerators and like certain components that they're having trouble getting that's blocking the whole supply chain.
And remember, I said, I think last week or the week before, that inflation tends to beget inflation. Like,
Yeah.
people start to behave when you're in an inflationary environment. They start to behave as if there's going to be more or even higher inflation. And that in itself can contribute to inflation. So you think about people now, like, rushing out to buy a
Hoarding
house
lumber.
because they think it's going to get even more expensive next year. So that's why they're bidding so aggressively, or bidding up lumber prices, or bidding up NFTs, or bidding up whatever, because they believe that it's going to be a higher price 6 months, 12 months, 18 months from now.
Yep.
And the same thing can happen with businesses ordering. They can over order to get their allocations. You know, I'm trying to get a GPU, and I'm like, I'll pay $100 more, just give it to me. And like,
Yep.
and then, you know, Nvidia starts giving its suppliers bigger orders. So it's just, it's weird. Like, inflation has this weird self-fulfilling,
Prophecy.
Yeah.
mechanism to it, I guess. Yeah.
Yeah. So I don't know. I guess we're at kind of a weird point in the market still, and you know, things are definitely heating up. This, I think, is the story to follow for the next year. Is what does China try to do with their own very fake digital currency? What does the ECB do with their euro fake cryptocurrency? And what does Miss Yellen say or do with the IMF and the World Bank? You know, like, I don't know. This is the time where I think it is really important to pay attention to the macro and what's happening with this stuff, and just make sure that you own hard assets. Verifiably scarce NFTs. That's where I'm putting all my money.
CryptoPunks.
That's right.
Going all in on CryptoPunks.
Do it.
I'm going to own like 20 of them
All right.
and put pictures of them all over my walls. There's my net worth.
Yep. All right, guys. Anything else you want to say before we wrap it up? Anything you're looking forward to next week?
You know, I know that in the stock world, things have been a bit quiet.
Yep.
And even with Bitcoin, you know, people are staying. We're kind of in this patience mode.
Yeah.
All around, you know.
Yep. We talked about that last week. Yep.
Yeah. And I just encourage people, you want to be doing something, you want to be making a trade, but a lot of money gets made when you're patient and chilling too.
Yeah.
So
The markets are a mechanism for transferring money from the impatient to the patient.
yeah.
Yep. Awesome.
Thanks though for joining us today.
Yeah. Yeah, guys, thanks for joining us. Go to wetalkmoney.com, submit a question for the show, subscribe to the audio podcast, and obviously the YouTube channel.
And check out the community.
Yeah, skillincubator.com if you want to come invest alongside us. And yeah, we'll see you guys next week. Take care.